Hi, I'm Sanjana, and my teammates for this project are Akshar, Karan, Rachita, and Soumya. The two competitive companies that we've chosen for this project are Intel and AMD. Companies engaged in the design and fabrication of semiconductor devices fall under the semiconductor industry. It was formed around 1960 since the fabrication of semiconductors became a viable business. Why they are recognized as key driver for economic growth is because they are an essential core of a lot of technological devices, from smartphones to television sets and even military systems. The industry is dominated by various countries like USA, Japan, South Korea, Taiwan, Singapore, and European Union. Based on revenue, Intel and AMD are the world's largest semiconductor chip makers. Introduction to Intel. Intel was founded in Mountain View, California in 1968. With an initial investment of $2.5 million and $10,000 from Rock, Intel was convertible debentures. Intel became a public company via an initial public offering 2 years later. In 1965, Dr. Murray predicted that the number of transistors that could be etched on a chip would double annually for at least a decade, which was later called Moore's Law. Advanced Micro Devices is an American multinational semiconductor company based in Sunnyvale, California. It develops computer processors and related technologies for businesses as well as consumer markets. Initially, it manufactured its own processor. Global Foundries was spun off in 2009, after which company became fabless. Now moving to key competitors in this industry, basically for Intel and AMD. Competitors in PC chipsets: AMD, VIA Technologies, Silicon Integrated Systems, and NVIDIA. The only major competitor in x86 processor market is AMD. Intel has had full cross-licensing agreements with AMD since 1976. Some smaller companies like VIA Technology produce low-power x86 processors for small factor computers and portable equipment. The key drivers that control this industry's growth are: number one, the role of the industry as technology enabler. In its role as a multiple lever and technology enabler for the whole electronics value chain, the semiconductor industry is widely recognized as a key driver for economic growth. Number two, continuous growth but in cyclic patterns with high volatility. While the current 20-year annual average growth of the semiconductor industry is on the order of 13%, but this has been accompanied by equally above average market volatility. Number three, need high degrees of flexibility and innovation to constantly adjust to the rapid pace of change in market. Usually, many products embedding semiconductor devices have a very short life cycle. At the same time, the rate of constant price performance improvement in the semiconductor industry is staggering. Changes in the semiconductor market occur extremely rapidly and also anticipate changes in industry evolving at slower pace. Another consequence of this rapid pace, established market strongholds can be displaced very quickly. Industry challenges. Number one, many challenges are currently faced by the industry due to the surge in semiconductor demand from smartphones and tablet market. Although a stable growth is anticipated to be witnessed in the coming years owing to emergence of new technologies such as Internet of Things, consistent R&D spending, and growing competition for new technological innovations among the key players. Number two, the acceleration predicted by Moore's law has slipped in recent years. Almost a decade ago, chip speeds stopped increasing. The time between new generations is stretching out and the cost of individual transistors has plateaued. Number three, according to technologists, new generation of chips will come more slowly, perhaps every 2.5 to 3 years. The law of physics dictates that transistors by the middle of the next decade will be composed of just a handful of molecules and not function reliably, unless a new technological breakthrough occurs. Moore's law will come to an end. Now coming to timeline, Intel has many instrumental periods which has led to the great success of company. 1970 to 1980, Intel manufactures a variety of semiconductors. 1981 to 1986, Intel's share of DRAM decreases due to competition with Japan. 1987 to 1998, this era is dominated by a boom in personal computer sales. 1998 to 2005, the internet was beginning to usher in massive changes in e-commerce and consumer behavior. 2005 to 2011, with Moore's law starting to slow down in 2005, Intel starts releasing multi-core processors. 2012 to 2015, smartphone purchases significantly increase, but by the end of this period, PC sales start to decline. AMD's timeline: 1970, AMD produced its first proprietary product, which was highly successful. In 1973, the company was second source for Intel MOS LTS circuits. 1976, when Intel began installing micro-coordinates microprocessors, it entered into a cross-licensing agreement with AMD. 2000, AMD is first to break the historic 1 GHz. 2007, AMD introduces graphics processor for desktop and mobile platforms. 2010, AMD announces the AMD Opteron TM4000 series platform, the first true server platform designed from the beginning to meet the needs of cloud, hyperscale, and assembly data centers.
Hello, I'm Rachita. Topics I'm going to talk about today are risk factors, street position, and earnings call summary of Intel and AMD. The risk factors of Intel, the first one is changes in product demand can harm their results of operation and financial condition. By this we mean demand for their products is variable and is hard to predict. Changes in the demand for their products may reduce their revenue, increase their cost, lower their gross margin percentage, or require them to write down the value of their assets. The second one, they operate globally and are subject to significant risk. By this we mean global or regional conditions may harm their financial results. They may be affected by fluctuations in currency exchange rates. The third one, they are subject to IP risk and risk associated with litigation and regulatory proceedings. By this, we mean they may be unable to enforce or protect their IP rights. Their licenses with other companies and participation in industry initiatives may allow competitors to use their patent rights. Next one, they are subject to cybersecurity and the privacy risk. They are subject to risk associated with transactions. And the last one, they are subject to sales related risk. Next, risk factors of AMD. The first one, Intel Corporation's dominance of the microprocessor market and its aggressive business practices may limit their ability to compete effectively. By this we mean Intel Corporation has been the market share leader for microprocessor for many years. Intel's market share, margins, and significant financial resources enable it to market its products aggressively, to target their customers and their channel partners with their special incentives and to influence customers who do business with them. These aggressive activities have in the past and are likely in the future to result in lower unit sales and lower the average selling price for many of their products and adversely affect their margins and profitability. The next one, they rely on global foundries to manufacture all of their microprocessor and APU products and a certain portion of their GPU products. The next one, they rely on third parties to manufacture their products. The next, the loss of significant customers may have a material adverse effect on them. As we know, as their top 5 customers accounted for approximately 68% of their net revenue during the year which ended in 2015. So if they even lose one customer, they'll face a huge loss. The next one, global economic uncertainty may adversely impact their business and operating results. Uncertain global economic conditions have in the past and may in the future adversely impact their business, including without limitation, like a slowdown in Chinese economy. They have a substantial amount of indebtedness as their total debt as of December 26, 2015 was $2.26 billion. Now, Intel street position and expectation. The first, the Intel Corporation trades at a lower price or book multiple, 2.56, than its peer median, which is 4.58. The market expects Intel to grow more slowly than its peers and for its median ROA to decline. Intel employs relatively high amounts of assets while generating relatively median profit margins. Changes in the company's annual revenue and earnings are around the median among its peers. Over the last 5 years, Intel return on assets has declined from above median to about median among its peers, indicating declining relative operating performance. The last one, the company's margins are around the peer medians and do not suggest any benefit from a pricing or an operating cost advantage versus peers. The street position and expectations for AMD. AMD Advanced Micro Devices currently trades at a higher price or book ratio of 17.07 than its peer median 5.59. AMD's earnings are both negative, which suggests that price earnings ratio are not meaningful to make this analysis between operating advantage and growth expectations. AMD has relatively low net profit margins while its asset efficiency is relatively high. AMD return on assets currently and over the past 5 years has trailed the peer median and suggests the company might be operationally challenged relative to its peers. AMD operating performance may not allow it to raise additional debt. Now, the earning call summary of Intel. The graph here shows the net income of Intel for the last 3 years. The green bar shows the revenue, and the blue bar shows the earnings. They have a good revenue and good earnings, but their revenue was little less in 2015 than in 2014. The company posted an annual revenue of 55.4 billion, which went down by 1%, and their net profit of $11.4 billion. The gross margin was 62.6% compared to 63.7% in the year ago, which is 2014. Their data center group revenue of $4.5 billion, up 13% sequentially and up 10% year over year. They have earnings per share of $2.33. Earnings call summary of AMD. The net income of AMD for last 3 years is shown in this graph where the green bar says the revenue and the blue bar says the earnings. We can see from this graph clearly that the earnings of AMD are going below, that is, they are going in negative. They have a loss per share of $0.12 and they have a cash and cash equivalents of $1.2 billion and a total debt of $1.6 billion. Over the next 5 years, the analysts that follow this company are expecting it to grow earnings at an average annual rate of 6.25%. This year, analysts are forecasting earnings increase of 59.22% over the last year. Analysts expect the earnings growth next year of 72.32% over this year's forecasted earnings. Thank you.
Hi, I'm Soumya and I'm going to be talking about the financial statement analysis. Vertical analysis is used in an income statement most commonly to show various expense items as a percentage of total sales. For Intel, we see that the net income for 2014 and 2015 is approximately 21% of the net sales. For AMD, the graph represents that the net income is a negative value of 16% of the net sales. Looking at the vertical analysis for Intel and AMD for the year 2014 and 2015, we see the net income is 21% of the net sales, whereas the net income of AMD is a negative value of 16%. When a business has a negative income, it means that the costs are greater than its total revenue, so it loses money over time. Prolonged periods of negative income can deplete the cash that company has on hand and may eventually lead to accumulation of debt. Coming to the horizontal analysis, it compares an account over a period of time. Horizontal analysis is calculated as current period minus previous period divided by the previous period. It is represented as a percentage value. The net sales for Intel in 2014 was 55.8 billion and that in 2015 was 55.35 billion. There is a 1% decrease in the net sales over a period of time. The gross profit decreased by 3%, going to 34.6 billion from 35.6. The operating expenses in 2015 were 20.6 billion as compared to 20.62 billion. It increased by 2%. As a result, the operating income in 2015 was lesser than that of 2014 because the operating expenses were higher and the gross profit was lower as compared to 2014. The net sales for AMD in 2015 was 3.9 billion and 2014 was 5.5. It decreased by 28%. There was a decrease in the gross profit by 41% from 2014 to 15. As a result, there was a 210% decrease in the operating income. After the taxes, the net income for 2015 was a negative value of 0.65 billion and 2014 was 0.403 billion. There was a 61% decrease in the net income. After the analysis, we can conclude that Intel and AMD both had a better net income in 2014 as compared to 2015. Now coming to the balance sheets, in vertical analysis, all other accounts are stated as a percentage value of total assets. The total assets for Intel in 2015 was 103 billion and for AMD it was 3 billion. Cash and cash equivalents comprise of 25% of the total assets for AMD, whereas only 15% for Intel. Intel has 31% investment in property, plant and equipment, and its long-term assets sum up to be 61% of the total assets. AMD has a long-term assets worth 25%. If we look at the liabilities, Intel has total liabilities comprising up to 25%, whereas the total liabilities of AMD is 113% of its total assets. We even looked at the income statement, which showed that Intel has a positive revenue whereas AMD has a negative one. It means that AMD has long-term debts and liabilities, which is also reflected in the balance sheet. Looking at the treasury stock, AMD has a treasury stock of 226% for the year 2015. Treasury stock is a contra equity account and thus it appears in a negative value. By buying back its stock, a firm reduces the number of shares outstanding, which in turn gives shareholder a larger piece of earnings. It also means that the company thinks its share price will increase if it pulls back some of its shares. Retained earnings refer to the percentage of net earnings not paid out as dividends but retained by the company. Intel has retained earnings was worth 36% and total SE worth 60%, whereas AMD has a total SE of minus 13% as compared to the assets, and retained earnings as a negative value of 235% for the year 2015. Horizontal analysis for Intel shows that the cash and cash equivalents have increased by 498% for Intel over 2015 to 14. The current liabilities have decreased by 2%, but the long-term liabilities have increased. There is also an increase in the SE by 9% from the year 2015 to 2014. For AMD, cash has decreased by 2%. The total liabilities have also decreased by 2%. The total SE has a negative value of 320% from the year 2014 to 2015. On comparing both, the total assets for Intel have increased, whereas that for AMD have decreased. The total liabilities for Intel has decreased and there is an increase in the SE. For AMD, the total assets have increased a little, the liabilities have decreased. But the stockholders' equity has also decreased as compared to 2014.
Hi, I'm Akshay Takle and I'll be presenting to you stock value trend and creditors analysis.
Let's look at the Intel stock trend for the past few years. Due to its dominance in PC industry and large customer base, profitability and popularity of Intel has increased and the stock value shows the trend of investor confidence in Intel. From the stock trend graph of AMD, we can see that the stock price of AMD in years 2014 and 15 is practically low as it's ever been. The company expects this year to mark the turning point of its efforts to turn the business around. Non-GAAP profitability is expected to return during the second half of this year, that is, a massive improvement over 2015. AMD provided similarly optimistic guidance last year, but the company came up far short and was forced to abandon those targets just a few months later. The company sports a market capitalization of just $2.8 billion, down more than 80% over the past decade. A return to profitability in 2017 or 18 would likely to send the stock soaring. Creditor. Creditors will analyze the financial position of the company to decide whether to lend money or not. The decision may be based on various parameters such as how much profit is the company making on its sales, liquidity, company's purchasing and production efficiency, and most important, days payable outstanding. That is, how fast the company pays its creditors, as the creditors would want the company to pay its debts as early as possible. Let's look at the balance sheets of both the companies. Looking at the balance sheet of Intel, we can tell that the total assets are increasing year by year, while the liabilities remaining almost the same. The bad thing about AMD is that the stockholders' equity is plummeting year by year, while the liabilities are increasing. There is also decrease in the total assets from the year 2012 to 2014. Profitability. For a creditor, profitability of the company is very important because if the company has low profit margin, how will it pay for its debts? Looking at the graph, we can see that the Intel is far more profitable than AMD. Intel has better profit margin, return on assets, and return on equity. Let's look at the income statement of Intel. There are a lot of headwinds working against Intel at the moment, but the company is still very profitable. During 2015, Intel generated net income of 11.4 billion, putting the P to E ratio of stock at about 12.8. The bad news is that the competition is coming. AMD will launch new server chips in 2017, potentially winning back some market share, and initiatives from International Business Machines and ARM Holdings to create viable alternatives in data center are slowly gaining momentum. A quick look at AMD's income statement reveals that the company is in serious trouble. Revenue dropped 28% in 2015, driven by weak PC market, share losses to Intel, and share losses to Nvidia in the graphics card market. The company posted a $660 million net loss on 3.99 billion of revenue. That is the fourth annual loss in a row. AMD's book value, or assets minus liabilities, turned negative.
Hello everyone, I'm Karan and I will be explaining the business segmentation and executive compensation structure of Intel and AMD, and later on I will move to the analysis of the key financial ratios part.
Clearly, Intel looks attractive for the creditors at this point. AMD has more upside potential, but the company needs to deliver with its upcoming product launches, something it's had problem with in the past. Intel has an attractive valuation assuming earnings don't decline, but the company is facing major headwinds as PC sales slump and its efforts in mobile fizzle. Intel is more safer simply because the company is wildly profitable and enjoys some significant competitive advantages. For creditors, Intel looks like a better option, despite the myriad problems facing the company.